Good afternoon, everyone. I appreciate you taking some time with me today for our webinar, CARES Act Programs for Business, an overview for business owners. I think most of you know me. Most of the folks on this call are clients, but some are not. I am Mark Schnoll, CPA, owner of Sexton Schnoll CPAs. We are a full-service CPA firm based in Gainesville, Florida, although we have clients throughout the U.S. We focus on small business accounting and tax planning, and we also work with a number of nonprofit organizations. Personally, I did my undergraduate work at the University of Wisconsin, and I am a two-time Florida Gator, got my MBA and Master's of Accountancy here at UF. My contact information is well, it was there, mark@sextonandschnoll.com. Today's agenda, first a little bit of housekeeping. I have about 20 minutes of prepared comments, and then after that, we'll leave plenty of time for questions. Technically, we've scheduled this for 30 minutes, but if the questions go on longer, I'm happy to stick around. Please enter whatever questions you have into the chat box. I will go through them at the end. While we're running the slideshow, I can't actually see what's in the chat. So, but I will go through the chat box when I finish the prepared comments. Today we're going to talk about the CARES Act. First, I'll do a short summary of the major areas of the law, and then we'll get into the major provisions for business. We'll talk about the Employee Retention Tax Credit, the Paycheck Protection Plan loan program, and the Economic Injury Disaster loans. Those are the major business aspects of this law. And then we'll get into some topics for further discussion. This is the first webinar that I have done, and in a short time, we only have the ability to really scratch the surface of the CARES Act. There's obviously a lot going on with COVID-19. So if you've got feedback, if you enjoy this presentation and you'd like us to do more, I'll be happy to do that. So just let me know. And then after that, we'll have Q&A again for really as long as necessary. So let's get right into the CARES Act. This is a $2.2 trillion, trillion with a T, stimulus package in light of COVID-19. Obviously, everybody, practically the entire world, has been impacted significantly by COVID-19. The economically, we're in a near shutdown mode. 10 million new unemployment claims in the last 2 weeks in this country. Many businesses are closed. Many businesses that continue to operate are operating very differently. Some are in good shape. I had a call with a client earlier today that's their business is booming because of the nature of their business, but most businesses are not. Most businesses are hurting, and that's why we have this major piece of stimulus legislation. There's really something in it for everyone. There are benefits for individuals. We've heard about the direct cash payments. There are a variety of other aspects that impact individuals. At the federal level, or at the governmental level rather, we've got funding for a number of government agencies, federal, state, local, basically money to help governments support and really help all of us in terms of healthcare, in terms of financial aid programs for folks that are hurting right now. And then help for businesses. We've got, I mean, and that's really what we're going to talk most about today. Some tax relief as well as some forgivable loan programs. Now, the three major business provisions of the CARES Act that we're going to talk about today, one is the employee retention tax credit, the Paycheck Protection Program loans, and economic injury disaster loans. Basically, all of these are meant to help businesses continue to operate and maintain employment. It is better at so many levels to maintain that employer-employee relationship. You know, it's better to have, if the government's got to foot the bill to keep us all afloat, better to have government pay employers to pay employees than to have massive unemployment. Obviously, unemployment is up, but whatever we can do to stem that tide is I think, a good thing. So the employer retention tax credit is available to businesses and nonprofits that have been severely harmed by COVID-19. The PPP loans, these are available to businesses and nonprofits with under 500 employees. And the economic injury disaster loans available to businesses that can demonstrate significant harm from COVID-19. Let's talk about the employee retention tax credit first. This is a 50% tax credit on qualifying wages up to a maximum of $5,000 per employee. To qualify, one of the following must occur. Either the business must be subject to a partial or full shutdown by governmental order. The classic example is the restaurant that is still open for business but cannot do table service. That would be a partial shutdown. A full shutdown would be literally closing the doors because the business is considered non-essential and is no longer allowed to operate, or at least for the moment. So that's sort of a way to automatically qualify regardless of the financial impact. Another way to qualify for this tax credit is if the business suffers a 50% or greater reduction of quarterly revenue compared to the prior year quarter. So if in this current quarter, April through June, let's say, if a year ago, the business generated $1 million of revenue, and this year it's 500,000 or less. That's a 50% reduction, and they would qualify. This credit actually runs through the payroll tax system, and so it's a refundable credit that can be claimed on the quarterly Form 941 in the quarter in which the credit is earned. Alternatively, you can, worst case, we file 941s at the end of each quarter. So for the second quarter, it would be July. You know, you wait until then to get it. Alternatively, you can actually claim an advance payment on the credit on Form 7200. I promise these are the only two form numbers I will discuss today, but basically you don't have to wait to get this money. The next program that I want to talk about is the Paycheck Protection Plan loans, and this is something I would say that 80 to 90% of the calls and inquiries that we have received in our office in the last week or so has been about this provision in the law, and the reason is that we've heard the news about the potential for forgivable loans, or what I would call free money. So let's talk about that. The PPP, these are Small Business Administration guaranteed loans. Doesn't mean that you're guaranteed to get the money. The guarantee means that the lender will be made whole if the borrower doesn't pay. So the bank has an incentive to make as many loans as they can. Nearly all businesses and nonprofits with fewer than 500 employees qualify. And the loan amount, the maximum loan amount, is 2.5 times your monthly payroll. And that's based on, it's generally based on last year, 2019, the payroll last year. These loans are issued by SBA approved lenders. So typically local banks. I know here Wells Fargo does these loans, Capital City Bank, Bank of America. Basically, you should start with your current bank, whoever you currently do business with, and that would be your starting point in terms of the application process. Applications, they started accepting applications for these loans last Friday, April 3rd. This program is, there's a total of $350 billion, actually it's $349 billion in this program. But that's probably not enough money for everybody. So this is a very popular provision. We recommend you apply soon, and a copy of the loan application is there on the slide, or the website where the application is located. Understand you're dealing with your bank though. So each bank will have its own forms. They should largely conform to this form that's put out by the SBA. So just some terms on the loan. A 1% interest rate. I mean, these terms are basically standardized. So this is not a situation where you're going to want to go from bank to bank trying to get the best deal. Every bank is going to essentially have the same deal. So if you can get the money, if you can get the loan at your bank, that's where you need to go. We've talked about loan forgiveness, and that is what makes this, you know, even among folks who are doing fine and don't actually need money to maintain cash flow or keep their business open. This is there is a loan forgiveness feature in these PPP loans, and here's how it works. The loans are meant to pay salaries and occupancy costs, and that occupancy costs is basically rent, utilities, excuse me. And if you own your space subject to a mortgage interest would also count. These loans are 100% forgivable if your headcount, the number of employees you have, and salary levels are maintained. And in terms of the math, how much can be forgiven? 8 weeks worth of payroll and occupancy costs. So the way it works is you apply for the loan. Your maximum loan is based on last year's payroll, 2.5 months worth. And then once you get the money, the clock starts to run. And for that first 8 week period, your payroll costs and your occupancy costs, what you pay at that time is largely forgiven. I'm oversimplifying a little bit, just in the interest of time, but that's basically how it works. A note: payroll must be 75% or more of the total that is forgiven. So if you are in a situation where you only have a couple of employees and really high rent, this is probably not the program for you. This is meant to maintain employment and have and to pay salaries. Another program, the other program I wanted to talk about today is the Economic Injury Disaster Loan. This is an existing SBA loan program. It's been around for a long time. Typically, you know, if there's a disaster in a particular area, a storm, a flood, right now the entire country is suffering under the COVID-19 pandemic. And so they have expanded and tweaked this program. Unlike the PPP where you go to your bank, with the EIDL, these loans are actually directly made by SBA, and the website is right there on the slide where you can apply. And by the way, all of these slides and this this program is being recorded and will be posted to our website. So you'll get that, or if you miss something, you can come back and watch it later. So the EIDL, these loans can cover actually more than just payroll. They can cover rent, other working capital needs, including other debt payments. And something they're promising with the EIDL for COVID-19 is when you apply, supposedly you get a $10,000, you can get a $10,000 advance on loan proceeds. And that advance is actually forgiven if the loan isn't approved. So that's another opportunity potentially for free money. So these are very interesting times that we live in. A couple things we should know. We've talked here about 3 different programs, and some of these, you may be thinking, oh, let me get both loans in this case. The rules actually prohibit getting 2 loans for the same purpose. So if you're looking at help to make payroll in May, you can't get a PPP and an EIDL for the same purpose. However, you can get loans for 2 different purposes. And what I mean by that is, for instance, if you got a PPP loan to cover payroll in May and June, and you could then get an EIDL to cover working capital needs, including payroll, from July on. So there's a workaround there. Similarly, there's a prohibition between the Paycheck Protection Plan and the Employee Retention Tax Credit. If you get the PPP loan, you can't get the ERTC. So at the risk of being self-serving here, we are here to help you navigate this situation. If you've got questions as to which program is best for you, I'm happy to. I've had a number of these calls already, and I'm happy to work with you to help you figure out which program or combination of programs is going to be best. Some final thoughts on the ERTC, the PPP, and the EIDL. Understand we've got different eligibility requirements for each program, different purposes. They're all meant to help stabilize the economy. They're all meant to help stabilize employment, keep people working, or at least paid to work. But every taxpayer, every business is going to have a different need and a different situation. So there really is no one size fits all situation. The strategies to deal with one customer or one business's strategy to deal with this is going to be different than another depending on their needs. Also understand this situation is very fluid. We have seen the world changes seemingly day by day. And since this law was passed 10 days ago, it was written very quickly. So some of the language in it maybe is not as clear as it ought to be. The interpretations have varied. If you followed this closely, you know that a lot of this has, a lot of the parameters for these programs have changed just in the last week. So keep on top of it. Follow our alerts. We've been sending out alerts on Wednesdays as to what's happening, and we'll continue to do that. And also be aware, the longer this situation continues with COVID-19, the more likely we'll have additional stimulus legislation. We have already had 3 different laws to help fight the COVID-19 pandemic and its economic destruction. So if we are sitting here all working from home a month or 2 from now, I would expect there would be further legislation. So, those are kind of my final thoughts on this. Some topics for future webinars. Again, if you like this program, if you want us to do this again, some things that just off the top of my head we could talk about, and certainly there are other topics as well. So with that, I've sort of reached the end of my 20 minutes, and I will open it up for questions. So let me look at what we have in the chat box. Let's see. I'm not seeing a lot of questions. So feel free there are a couple questions here, but feel free to chat some more. One of the questions, what is the look back period for the for the PPP, the payroll? We're basically looking at 2019. The 2019 payroll. They're not necessarily looking for the first quarter of this year, even though the first quarter is over. So, so that's the answer there. We have another question. How do LLCs fall into these if there's no payroll, but there is rental? There are rentals. So I would say that the PPP in this case is probably not a good program for you, because that really is about payroll and maintenance of payroll. Similarly, the employer retention tax credit really isn't going to be helpful there. So you're really left with the EIDC, and I would recommend that if you are a business that doesn't have a lot of payroll, that's probably going to be the best program for you. So if there are any other questions, here's another one. A question about independent contractors, and that's something we didn't really get into, but we will now. Independent contractors are eligible for all of these programs. In the PPP setting, it's really the net income from self-employment that is sort of the proxy for payroll. So if you are a self-employed person, and you make, say, $50,000, well, I'll make the math easier. You make $48,000 in your business. That's $4,000 per month. In that case, you would be eligible for a PPP. 2.5 times $4,000 is $10,000. That would potentially be forgivable. Similarly, you would also be eligible for the ERTC up to a maximum of $5,000. So again, you can't do both of those programs, but you could do one or the other, and that would work out just fine. I mentioned earlier that applications were accepted starting last Friday, April 3rd. For self-employed folks, that date is actually April 10th. So you've got to wait until this coming Friday before you can apply for PPPs. We had a question here that do we calculate owner distribution as part of payroll or only wages? The answer is only wages, but owners' wages do count. So in, let's say, an S corporation, the salary paid to owners does count. By the way, I want to mention, I don't think I mentioned it earlier, compensation is limited to $100,000 of salary plus other costs such as retirement or health insurance. So if you've got an employee or an owner, for that matter, who draws a salary of, say, $140,000, only the first $100,000 is eligible for the payroll calculation of your maximum PPP loan. It would be, in that case, it would be $100,000 plus those benefits we talked about, retirement and health insurance premiums. I think I have answered all of the questions that are here. I'll wait just a moment or two to see if anything comes in. Do we include Roth IRA contributions in the PPP? I'm not sure I'm understanding that. If it's an employer contribution, the answer would be yes. That does count. An employee contribution would not count. Question, health insurance for owners. Yes, health insurance costs absolutely count as part of payroll here in the calculation. Let's see. I'll wait just a moment or two to see if any other questions come in. Again, you can, I'm typing in my email address here. If you have questions that and you'd rather, if you would like our help to analyze this for you, you can reach out to me directly after this is over. Question, if we receive the advance on the EIDL, does that come out of the amount awarded by PPP? That is a good question, and the answer, I don't want to give a wrong answer, so I'm not going to give an answer right now. I'm taking this down, and I will email you. I'll get you the answer and email you privately, Michelle. Asking about the general requirement to get the EIDL approved. That's also one that I'll, Stefan, I'll email you information on that directly. Okay. Any other questions as we before we call it an afternoon? Chrissy, I see your request there too. Okay, then I thank you for your time, and I hope this has been informative for you. Again, please reach out to me if you have any further questions, and we'll talk again. Thanks.